So in trading, we must make informed decisions. We must understand what the markets are doing. We must be able to forecast where we think the market is going to go and when it is going to get there. But to do this, a lot of traders seem to be lost. They seem to think that technical analysis is the only way forwards. It's a shiny object that they are attracted to, and this is how they will get rich. And this just simply isn't the case. So today I'm going to explain to you the proper approach to the markets, how to conduct research, and how to make better informed decisions, and how to basically reduce your downside by making sure that you have the full scope. So there are different types of analysis. So of course we have the technical analysis, we have economic analysis, fundamental analysis, and sentiment analysis. So sentiment analysis is essentially what is everyone else doing in the market? What do people think is happening? We want to trade against retail traders. We want to trade with smart money. That should be given. That should be something that we all understand. And sentiment analysis isn't that deep. It's something the majority of people have access to. So you can see it, for example, with your broker. You should see market data and they will tell you what the majority of their clients are doing. You can see this on MyFX book. You can see this everywhere. Whereas what the institutions are doing or what the large market participants are doing, this can only come from the COT report by the CFTC. And I will show you how to get access to that in a moment. We have economic analysis, which is basically taking into account the geopolitical landscape of the world. What's going on? Are there any wars? Is there a pandemic? Is there shortages anywhere? Global catastrophes such as earthquakes, tsunamis, those types of things. What's going on in the world that can potentially move the markets? Then we have fundamental analysis, and this is looking more at the economies of each place. So for example, what was the last NFP release? What was GDP for the USD compared to the GBP? And these types of things. So all of this combines into gaining a proper outlook on the markets. So in front of me, you should all recognize this. This is the economic calendar. Now, I'm not going to go too much into this because I know that the majority of traders know what this is. They know how to interpret it, but I will go over it very briefly. And then we can start moving forwards. However, just a disclaimer, there are some things in here I'm affiliated with, and I can leave links in the description if you do want to get involved with them and start using these platforms, but we can move forwards. So this is trading economics. This is the calendar that I use. So if we go into impact, personally, I only care about the high impact news. So I choose the 3 stars. Countries, again, I only really care about the majors, so the USD, the GBP, JPY, those types of things. I don't, for example, Argentina, I don't really care what news is coming out of Argentina. So let's just leave that there. So we can see what news is coming up for this week. So this is a big factor. We need to know if we are going to enter a trade, for example, today, and then we have FOMC minutes on Wednesday. How are we going to manage this trade and ensure that if FOMC comes out against us, how can we manage our risk? Do we need to account for this in our stop loss? Should we wait until Wednesday? And these are things you need to understand. You need to be accountable for this. So let's say you're in a trade, FOMC hits, and you're like, oh no, the market's manipulated. No, you just didn't manage risk. You didn't look at the consensus. You had no idea what was going on. So obviously there is no consensus for FOMC minutes, but for the inflation rate on the pound, we can see that the previous was 3.2. Consensus is 2.1 and the forecast is 2.3. So these are what we need to pay attention to. So if the consensus is 2.1, this is possibly priced into the market already. So if the actual news comes out at 2.1, it's very likely we won't see much movement because it's already priced in. Whereas if it came out at, for example, 1.8, we may then see bullish movements on the pound because obviously then we've got less inflation. So these are types of things we need to take into account. And we also need to understand that consensus is normally priced in. So this is why, for example, when you see a news release and it's consensus, forecast and release, and it's all the same number, there's not much volatility because nothing's really changed. At least people's ideas haven't changed. However, if obviously something has been priced in and as a big change that's expected across the market and it comes in flat, then obviously we will see volatility in that case. Now, moving forwards, this is something that's quite interesting to pay attention to and something that I check every now and again because I find it quite interesting. So if we go to FX Street, we can look at the latest analysis and we can see what other people are thinking. This kind of goes with the sentiment analysis, but then we can also gain ideas of what other people are thinking about the markets and what could move the market, something we may have missed, something that we maybe didn't understand or didn't know was happening. It's good to get other people's insights, and the people posting on FX Street aren't people sat in the bedroom. It's normally relatively professional people that understand what does happen in the markets and what should happen or could happen. This is a good tool to take advantage of. I personally wouldn't advise following these trades one-to-one. Obviously, these aren't signals. These are just analysis from other people. Now, the next tool, this is where it starts getting a little bit more interesting. And I am affiliated with the A1 EdgeFinder. So if you want a discount link, you can check the link in the description. But this is a platform that takes into account things such as COT, retail positioning, seasonality, trend, GDP, all these things across here you can see adds up to a rating that basically just rates the assets on how strong bullish they are or how strong bearish they are. And this is something I use as a final confluence on a trade. So for example, if I've done all of my other research, I will then go and double check with EdgeFinder. And if EdgeFinder agrees, then I'll go to the final stages of doing the technical analysis. And that's basically the workflow that I go with. Obviously, I don't want to go into this too much because this isn't an advertisement. I just want to show you what the benefits of using something like this. Now, there are other platforms. If you don't want to use the EdgeFinder, there are other places you can go and get this type of data from. But for example, rather than taking a COT report that's extremely hard to understand and a lot of text, very boring, you can see it here quite nicely and easily readable. This is good to have. So for example, like I said, we want to go against retail traders. So if we were wanting to go into a long position against the euro dollar, this is great because the retail shorting, we can see that just from a brief look, we can see that, for example, GDP, manufacturing, retail sales, employment change, unemployment change, these things are all in our favor. And these are all things making the euro weaker, making the dollar stronger. So Bloomberg is something else I use, and I do have a subscription to Bloomberg. You can use something else like Reuters or CME. You can use Bloomberg as well if you want to buy a subscription or you just want to use the free version. But this is great. I get notifications on my phone about the latest breaking news, what's happening in the markets, and this is good again just to get an overview, what's happening, who's saying what are expectations. For example, here you can see Fed expects higher steady state for inflation rates, and already that's good. It's something I could write down, keep a note of for next time I'm doing my analysis for the markets. So the next thing is Season AX, and this is a paid service, is a paid thing that I use. But this is extremely good at giving you that final sort of bit of confidence in your position. So for example, the pound New Zealand trade you saw on my screen at the start of the video, that didn't look too healthy anymore. We saw a bit of a move down into profit and now we're coming back up to entry. But if we look at Season AX, this takes into account the last 10 years of seasonal data. So you can see over 2016, 2017, 18, 19, 20 and 22, all very bearish years. And if we look overall, we only have a 30% winning chance. So if we're on the short side, that gives us a 70% chance of winning. So that's just another layer of protection or confidence in our positions. The reason seasonality works is because with markets, they have cycles and history repeats itself. And obviously this isn't every time because economics can change. Market conditions can fluctuate and things change. However, this is still a good idea. It's still a good thing to have on your side and pay attention to. Now, this is relatively new. This is called macroai. This is a tool that I have just started using, and what this does is it provides you bank reports on a daily basis. So every day you get the latest bank reports, and the way it works is, let's find MUFG, for example. We get the bank reports and we can basically use this as a chat GPT type of thing. So what we could do is, for example, let's say put this report into bullet points. So if you're in a rush or you don't want to read the whole thing, you can then just ask it questions. And for example, if you want to take a specific point, you could ask it to elaborate on that point. And then you can use that and base some analysis around this. And this is just a very easy, simple way to get access to bank reports if you don't have them already, and also break them down. Now, if you are an Elite Traders member, then obviously we give you all the bank reports every day inside the Discord, but obviously we don't have the AI factor. We just send you the reports directly. So again, there is a link for Macro AI in the description if you want to use this. Very, very good tool. A friend of mine made it. Couldn't recommend it enough. So this is when I'm going to give you something that's a little bit more complex. So this is called FRED. Now, FRED is the economic data. So if we look at unemployment, for example, we want to see the unemployment rate in the US. So what we can do is we can see here, we can change the time frame, let's say from the 2000s to current. We can see during COVID, we had a huge spike in unemployment at 14.8%. And since then, we've had a nice drop off and sort of a stagnation or a slowdown here. Now, what we can do to do this, to sort of take advantage of this, is gain a good perspective. So, for example, if unemployment rate is a baseline of, for example, 2%. So let's say that in the US, 2% unemployment is healthy. That's where it should be ideally. And this is if you don't have, for example, EdgeFinder, you can start gaining your edge here. So if it's at, our baseline's at 2% and we see it's at 3.8%, we know that the unemployment rate in the US is higher than it should be, or higher than they would like it to be. So this is something, again, we can take this into account. We can do it with unemployment, inflation, interest rates, CPI, NFP. We can do it with all sorts of things. And this is just a great way to understand, what's the current health of the market, what can we expect? And now a little bit of a plug. The final thing I would suggest is joining the Elite Traders Discord. So what we have in here is 2 bots that send out breaking news or any type of market news instantly. So we have these, we've got bank reports, we've got trade ideas. We do webinars every sort of day to 2 days. I also do a free stream on YouTube every Sunday where I break down what I'm looking at, what's going on in the markets, what we can expect. So of course, like I said, they're free. So if you want to join those, please do. But yeah, I think this has covered everything that you should need. I know I didn't go into too much detail on how to use everything, but I can do that going forwards. I just wanted to make you aware of these platforms and these programs that can help clarify markets, reduce your downside, increase your upside, and just open up what's actually going on rather than focusing on, what was the last 3 candles doing? No, what is the economy doing? What's happening across the world? How can I take advantage of whatever's happening? How do I make money doing this? And it's paying attention to what is actually going on, not the candlesticks. They don't tell you enough. Go and do some research.